Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Howe, in for Jack Otter. Coming up, Alphabet is outrunning the rest of big tech. We'll look at why and whether the stock still has way more to go. Oh boy. But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Elizabeth O'Brien, and Andrew Berry. Ben, slow week for the indexes, but I know you must have found something exciting going on under the hood. Tell us about it.
Well, I'm going to look on top of the hood.
Okay.
Because these are all very close to record highs. We had this big scare in November where it was off to the worst start since 2008 or something like that. But right now, the S&P 500 is about 0.3% away from an all-time high. The Dow's not much further away. The Russell 2000, which is small caps, was actually hitting all-time highs this week.
Let's talk about small caps. No scowling, Andrew. B of A says that earnings growth for small caps is about to leapfrog growth for large caps in 2026. And they say that historically, when that has happened, most of the time, small caps have outperformed by a lot. Is 2026 the year that small turns sexy for the stock market?
I actually think it is. I think we've had such a great run in AI, but the AI trade is shifting at this point. You're also getting other tailwinds for small caps, including the Fed. And as you said, earnings are getting good, and that's something that's been lacking for a very long time.
Has he talked you into it?
I'm still a little skeptical. Every year it seems to be the year for small caps as the year begins, and this year they're behind the S&P 500. They've been behind the S&P 500 for almost every year for the past 10 years. Bigger has generally been better.
Well, the same thing, you could say the same for international stocks that lagged for, years and years, and they're finally, having a moment this year, and it's projected to continue. So
that was a burn. He just got burned. That was an Elizabeth burn. Ben, what are you watching in the week ahead?
Well, I think we got to talk about the Fed. That's what this is really all about. Investors want the Fed to cut. It's almost certainly going to cut. But when that happens, then we have to listen to what's going to happen next, because there's going to be pushback. Inflation's still not entirely under control, and we're going to have a new Fed chair, but it may not be as easy to keep cutting rates as the way people think it is. So I think it's going to be paying attention to what the Fed says about that future.
Okay, Andrew. Netflix on Friday announced an agreement to buy Warner's studio and streaming businesses, including HBO, $72 billion. Kind of reminds me of the price that Disney paid for those 20th Century Fox assets back in 2019. Disney stock's actually a little bit lower now since then. Is this a bad sign for Netflix?
Well, big media deals generally have been a bust, and I think Wall Street's worried that this one may be one as well. Netflix is paying a very high price for these Warner assets, about 20 times next year's cash flow. Disney's trading for only about 10, and also the regulatory issues. And so, and the company is really going to be transforming itself from a very focused streaming company to more of a gigantic media company. And I think the stock was down this past week, Netflix, and I think there's legitimate concern about the outlook.
Can the deal even get done? I know there are antitrust laws to look at, but I also keep hearing about, well, the president likes this one, the president doesn't like that one. I know he likes the Ellison family over at Paramount. Is that a bad sign for the Netflix deal?
It could become an issue. Trump does like the Ellison family, which controls Paramount, and he's not crazy about Netflix. Reed Hastings, the chairman of Netflix, gave money to Kamala Harris, and also I think Trump views Netflix as being a woke company, and so and there's also been talk that the Trump administration already is not crazy about the deal.
You think it'll get done?
I think it'll get done, but I don't think it should get done. Look at everything that's happened to companies that buy Warner Brothers. You had AT&T bought Time Warner, not good. And you go back to AOL Time Warner. Do we all remember that one? That was fun. That's such a great way to lose money.
Yeah, but even if the Trump administration opposes it, the courts may side with Netflix, and I think that's what Netflix and Warner are betting on, that they're going to win in the courts if there is a challenge.
You're right. History is trying to tell us something about buying Warner. Okay, well, we'll see. Elizabeth, there are big changes coming for 401k savers next year. What can you tell us?
That's right, Jack. So as you know, you get a good deal on the money that you contribute from your paycheck to your traditional 401k. That money,
easy money.
Easy money. That's subtracted from your income, and you don't pay income taxes on it for the year. And older workers get an even better deal because they are allowed what the IRS calls catch-up contributions, and that amount for next year is going to be an extra $8,000 that they could put in. But starting next year, higher earners age 50 and over are going to lose the tax break on their catch-up contributions because a new rule says that amount has to go to a post-tax Roth account. It's going to be, counted in your income. You're going to pay taxes on it. It's for people 50 and over, making 150 and over.
Allow me to stoke a little generational conflict here, because this feels like the baby boomers have already finished ringing the register on their catch-up tax breaks, and now they're kicking Generation Xers like myself right in the Ferris Bueller's and saying, forget about it. No tax break for you. Enjoy your Roth. Do I have it right? How outraged should I be on a scale from 1 to 11?
Dial it back just a little bit, because it's not as bad as it seems. Because, you're not losing the tax break altogether. You are just pushing it into retirement. And look, so, Roth money can be withdrawn tax-free in retirement. And look, tax rates are at historic lows. They are not going to go down from here. So there's something to be said for getting some of the taxes out of the way now, while they're...
Andrew's not a Roth, but Andrew dislikes most things, which is part of what I love about it.
I do not like Roth IRAs. You always have to pay taxes now. I like to pay taxes and wait as long as possible.
You can't outrun Uncle Sam. Death and taxes.
But I'd much rather wait and take my chances later than pay the taxes now.
All right. Fair
All right.